Okay, good morning. And once again, I'm here with Andy Glatz, Senior Managing Director and Head of the SBA at Peapack Gladstone Bank. Andy, how you doing?
Hi, good morning, Rich, and thanks for having me. I'm doing good. My family's doing well. Hope you and yours are also doing okay.
Well, thank God for that. That's the most important thing. Andy, believe it or not, it's been over a year since I conducted my first interview with you at the beginning of this pandemic. And how has your job at your bank, Peapack Gladstone, changed over the past 12 months?
Well, over the last year, we've been busy, especially in the SBA department, uh, assisting our existing portfolio and our clients in this time of need. But also, we were really involved with the PPP funding, round one, round two, and a couple of the other SBA programs that they had out there.
No, that's great. That's great. So you're staying pretty busy, right? Speaking about the SBA, talk a little bit how the SBA has stepped up in their funding efforts throughout the pandemic and what new programs were launched to help small businesses.
So the first round, what they did is a PPP loan, and this was established March of 2020 under the CARES Act in response to the coronavirus pandemic. Uh, Small businesses received 2.5 times their monthly payroll based on either 8 or 24 weeks to help preserve their employees with a max loan of $10 million. And they had a couple different tranches, and recently we just finished up a second round of PPP2. The important thing is on that, how many businesses received funding, and I don't have the exact number, but it was in the millions. 10 million, I think it was 10 million borrowers
Wow.
received funding uh, for $780 billion. Tremendous amount of small businesses, and so we say businesses, and then the amount of employees that preserved. That's where this comes from. PPP preserved the employees. So that's, I know it's not perfect. We can talk about that more later. It wasn't a perfect system, but the amount of people and small businesses that were affected by that, tremendous. One of the other programs was the SBA EIDL loan, economic injury disaster loan. They had a couple different parts of it. It was a $10,000 grant, and then they did up to $2 million in favorable rates and terms. I think it was 30 years at 3.5 or 3.75% for the small businesses. Not handled by the banks. The SBA did this directly, but that was another big program that helped out, businesses throughout this last year and a half. And the last one is the restaurant revitalization fund, which we'll talk a little bit more about lately. That really had and will continue, I think, to have a big impact on the restaurants.
Let's stay with that, right? I know it's a little ahead we're going, but let's stay with that. My understanding is that within the first week of that program, the SBA got 147,000 applications and it was oversubscribed to over the $28.6 billion they had allocated. And they pretty much ran out of money in the first week.
So yeah, I think the intent was good. That's SBA. They wanted to try to help the people. I don't know if they expected to have that much turnout. They tried to roll it out to small businesses or smaller restaurants first to make sure as more people were able to receive funding. Uh, it just shows you there how many restaurants, again, nationwide, were affected last year. It's a tremendous number, and it's actually a scary number. And I think not that I know, but you would think they're going to try to go back and get some additional funding, or at least request additional funding, because the volume was just tremendous on it.
That, the way I understood that bill, it wasn't only for restaurants, it was for food service companies, it was for food trucks, it was for anything to do with really food preparation and service in the country. So and it started off with, first the minority business, then the woman-owned businesses, then the veteran-owned businesses, then even businesses that went bankrupt got the first crack before anybody else got it.
It, it No, you're right, and I think there were some questionable, parts to it. I go back and say I think the SBA's intent was good to try to help them. This program, unlike the PPP, was administered right by the SBA. Banks, lenders had no involvement with it, so they wanted to try to, do it directly. And I don't know if they look back, next year or years from now and say maybe they could have did it better, possibly. But I think in the time frame that they had, they're going to say that this is the best that we could do, and we want to try to help as many as we can. But I would hope, just knowing some of our customers, some received them, some didn't. I would hope that they're able to go back and get some additional funding for that program.
This question's as an aside. I wasn't planning on asking it, so it's probably going to be your opinion only when you answer it. But Andy, all this money that's coming into the economy generated by the SBA, the revitalization, the PPP loans, the EIDL loans. I mean, this money is just wasn't sitting there, right? It had to come from somewhere, and it's got to be paid back at some time. How do you see this as the future for the United States with all this money floating out there, and somehow sometime has to be paid back?
I think we're seeing some inflation kick up, and I think you're right. It's got to get paid back somehow, some way, and the taxpayers are going to feel the brunt of it one way or another. And I think it was a reaction initially. They had something had to be done. And I know we spoke beginning and during the whole pandemic, and a lot of our customers and people were affected, but not even affected, shut down, second, third generation businesses, and you feel terrible for these people. So I think it really helped. The long term, I don't know. We'll have to sort of wait and see that, the means justify, what they did.
Yeah.
I don't really know. We'll have to wait and see. I see both sides of it. I see the outcomes and how many businesses were benefited. You see some bad stories on the news and companies that shouldn't have received it or took advantage of the program. You have that, and unfortunately, it's in the it's in the spotlight right now where it gets a lot of attention. So you're going to hear a lot of negative news about it, and you may not hear all the good stuff.
You foresee the SBA coming out with any other new programs besides the restaurant revitalization fund to help small businesses, not only in the hospitality industry?
Well, I think that my opinion is they're going to come out with something else, just by the attention that this one received, how fast the funds were, depleted. You would think they would come out with something in the third or fourth quarter to assist small businesses. They may pause a little bit to see, that, get the businesses back on their feet. Don't let them be too dependent on the government. Let them get back out there. And as things are starting to improve, let them, do what they want to do. You think about it, the small businesses are entrepreneurs and capitalists. They want to earn their keep there. So maybe see how bad it really is instead of just pumping the money into the economy. But it's hard to say right now. The SBA has the other programs this under the 7A that waives the guarantee fee, increases the guarantee to banks and lenders, like Peapack, makes a few months payments even on new loans, all as a way to, incent lenders and borrowers to get out there and do some lending, which would stimulate the economy, which would stimulate the industry. So they are doing it. They're have a couple programs, as I mentioned, that'll expire in September of this year. Will they continue it? Will they run it through the end of the year? Not sure, maybe, but I think, me personally, and what we see here at the bank, I think that helped. You have, customers, instead of being affected by a guarantee fee, that's a big savings. The first 3-4 months payments being made by the SBA, that's a relief. And to increase the guarantee coverage to the lender, gives us peace of mind to say, all right, I'll lend, but we're not really sure what the future is going to bring. You increase our guarantee, and the government's behind us now a little bit more. We're more willing to get out there and help these small businesses.
With regard to that 7A program and the incentives that the SBA has put out there, you say that it expires in September of 2021. Does the loans have to be closed before the end of September or just approved?
To receive the payments, they have to be closed and funded. The guarantee, they just need to be approved.
Okay.
To be to be determined. SBA will change their minds on some of these things there, but so that September 30th date is fast approaching. Again, we're hoping they'll extend that through the end of the year, but it's it's been well received so far. We've had a lot of customers that were benefiting from that.
Yeah, that is a good benefit for people looking to acquire a real estate out
Okay.
there. That is for real estate loans. Those are not business only loans, right?
Correct. And if you think about it, the SBA guarantee fee is normally 2 to 3%. That's a savings right to the borrower.
Yeah.
So
Yeah.
it's not like they have to, a loan, they pay it back or it's added to the loan or refund. It's waived. So that's a pretty big savings. You figure the larger the loan, that really adds up.
As far as your job in the banking industry, what has been the biggest challenge you've had to face over the past 12 months or so?
Uh, let's see, over the past 12 months, I think the first would be to just working remotely and just getting used to a whole new, way of life. You've been going into the office for so many years. That was a challenge. That was a change. You get through it. The other was, unfortunately, not being able to help all the customers, all our, small businesses, all the individuals here, where for whatever reason they didn't qualify, they weren't eligible, the fundings were depleted for the PPP loan, and having to speak with them, and some knew as customers, some were calling in, and just not being able to provide the funding that they need, and hearing it in their voices, they're desperate, they couldn't go anywhere else. It was bad times. Again, we're on the other side of it now. Hopefully things will continue to improve, but at that point in time, it was very difficult. And you really, your heart goes out to these people that, again, these are your entrepreneurs. This is what they do, and they don't have regular paychecks coming in from their employer. They're working, and to be shut down, they have no other ways to get funding. So that was difficult, and that's why you really, you try to roll up your sleeves and help out as many as you can.
You mentioned working remotely as one of the changes in the banking, or your bank at least. What do you foresee as the long-term effects of the coronavirus on the banking industry? Or to say it another way is, what changes do you see in banking going forward?
I'd say the biggest one, Rich, is technology, and it ties in perfectly with this whole PPP and working remotely. What Peapack did, and every other bank and lender out there, and I think other companies, how we utilize technology. I think it was always there, digital banking, and we're rolling it out and getting involved in it. But the whole COVID accelerated that process. We became more digital overnight, and there was no way to process that volume, thousands of loans, without technology, without the portals, without the Zoom calls and technology there. It was really something, and I think that's here to stay. And what it also did is you learned how to be a little more efficient too. You'd be surprised. Everybody's a little scared of technology and it's never going to work. And we have customers there. So, many of these small businesses, no, they're not computer people or tech people. You'd be surprised how when they're forced to do it, access a portal, upload information. We're accessing technology on our side. It works. And so once you see that it works and we're able to accommodate thousands, borrowers there, you find your work a lot more efficient. And I think that's here to stay. And I think it's just going to continue to grow.
I would take it that with the increasing technology, you'll see a decrease in the bricks and mortar branches that banks will have to keep open or open at all.
I agree with you there. I agree with you there. I think it's just looked at differently. You're always going to have the walk-in business and the need for a branch, but the number of branches, I think it's, again, back to the technology. You'd be surprised what you can accomplish.
Here's the final question I'm going to ask you today, Andy, and I appreciate you spending time with us today. They say with every bad situation or a trial or tribulation that comes our way, something always good comes out of it on the end. what has been that good thing for you, either business wise or personal wise, that has come out of this coronavirus slowdown?
Well, I'd say two. The one is, we sort of touched on is the bad side of not being able to help all the businesses, but the positive is the ones that you were able to help, and then hearing these stories personally, and receiving emails, and the people thanking you, first, second, third generation small businesses that would have had to shut their doors and lay off employees that they had for 10 or 15 years without this. And not that we lended the money directly, it's not our funds, and but we helped facilitate it, the bank did, and thousands of other banks across the country. But that was a feel good moment there with all the bad stuff going on, that you're able to step up and help them, and the people, you really heard it, you felt it, and it was a good thing. The other is the sense of what you can accomplish, and again, it ties into what I was saying before. Prior to COVID, I'll make you laugh there with the technology side. To have a conference call or a Zoom call, you'd have your IT person on standby, and you'd have two or three other people. Now, I think I can do a Zoom call from my cell phone. We're setting up Teams calls with people. We're doing virtual onboarding of new employees, virtual loan closing with electronic signatures. And it's a little eye-opening there. You'd be surprised what and all compliant, everything else there. You'd be surprised what you can accomplish, and that's again, it's really, and I think that's here to stay. I really think that's here to stay. To say, here we are. Before, you saw it coming. You're saying, all right, this is the future, but it just really forced us into it, and now you're like, all right, brush yourself off and get back on your feet and say, all right, look what we did. All right, here we go. And as we said in the beginning there, things are improving. We're back out there. Now we did all these Zoom calls with our customers prior, and now we're heading back out there. And now we're, getting back on our feet, but you have a sense of, look what you did. And not too much can hold you back if you got through last year.
Yeah. Well, something, I think we've all learned lessons for the past years, and hopefully with the vaccinations ramping up, we're coming out of this, and maybe by the fall, we'll be on a track back to normal. Again, Andy, thanks for your time. I know you're busy in your banking profession with Peapack Gladstone Bank. I appreciate you coming on, and I wish you all the best, and have a great weekend, okay?
Thanks, Rich. You too. Thanks for having me. Talk to you soon.
Take care now. Bye-bye.